All right. Good morning, trade pros. Hope you guys had a great weekend. It is Monday, December 16th of 2019. And this is George Papasov, Trade Pro Academy, with your morning market update today. Let's get started by talking about a few things. We got quite the update this morning. First and foremost, I want to tell you this. Today is the last official full trading week of the year. From here, the next week is Christmas. Obviously, markets are closed in between the week, which throws off the entire cycle. Then the week after, and Wednesday is New Year's Day. And so you're going to get some lighter volume, thinner trade. I do caution you guys, if you're full-time at a job and then you stay home and decide this is the stretch of time you're going to use to evaluate yourself as a day trader, I caution you not to do that. This is time for you to just relax. If you're home, other professionals are home too. All right. And that's what really drives the market, is big institutional professional traders. It's going to be more of a wild, wild west environment after this week. This is the last week I typically trade, except last year. Last year I was trading on the 24th of December from my phone in between hockey shifts on our Christmas Eve hockey game tradition. But this year it might be a little bit slower. So let's talk about it. First of all, there's strong seasonality tendencies for the S&P during this period, something you have to know. On average, since 1960, the S&P 500 is up 1.5% in the month of December. All right, so far it's up 0.8%, and we are trading to new and fresh all-time highs as of this very current moment. 92, actually it looks like 93 quarter is the high print on S&P 500 futures. We continue to bid and climb here. We'll talk about why that is. All right, so the 1.5 mark is at 31.92 actually, which is where we're approximately at the moment. So we're more or less at that point. We've already priced in a lot of the seasonality. The last half of December, the second half of December, all right, since 1960, more than 2/3 of the time has been a positive period. And this is what's referred to as a Santa Claus rally, where you buy the market before Christmas and hold it until the end of Christmas. All right, there's no guarantees that works. It's not an investment strategy. It's just a seasonal tendency, and something for you to observe and be cautious of. This year, it might be a little bit different because a lot of traders and investors are expecting a shortage of liquidity. Today, we had a big repo. There was a lot of repo operations from the Federal Reserve. All right. These are the same conditions that cause shortage of liquidity in the end of September. Remember, this is at the end of calendar months. There's a shortage of liquidity. Why is that? What is liquidity? It's a shortage of U.S. dollars. We covered this in our Market Analysis Live webinar for all of our members of Trade Pro Academy on Sunday at 8 p.m. last night. That's up in the archive for those of you that are members listening. You can watch the full thing, but basically, there's a need to pay tax, so that creates a cash liquidity need. Also, hedge funds and other institutions who manage money whose clients are cashing out need to sell equities and generate cash. There's a lot of demand on cash and a shortage of it as a result. All right. Since September, the Federal Reserve has been really busy doing a lot of repos and growing their balance sheet. Today's no different. There's a 32-day, 50 billion repo that was offered. And the good news is only 36.4 billion worth of bids came in, meaning that it was undersubscribed, meaning that the Fed planned to give $50 billion, inject it into the banking system, but the banks only wanted 36 billion. It's less than the maximum they anticipated, but still a draw on the reserves. They're still relying on the Federal Reserve to supply that liquidity. It's a very interesting situation. And as the year progresses to the end, all right, and transitions to the next year called the turn, there's a projection of more shortage of liquidity. Keep an eye out on that, because this could have a market sell-off effect. As we enter the end of the year as well, we have to take profits on the equity side and put it back into bonds to restore balance for institutions, and a lot of selling as well to generate cash liquidity on the last opportunity, which is the third day before the end of the year, because there's a 3-day settlement rule. So interesting trends are ongoing here. In other news this morning, Boeing is down 2.5% pre-market on news that it may halt its production for the 737 MAX and discontinue it altogether. There's a board decision being made that could come a little bit later today that'll put a lot of pressure on the airline industry and impact the stock. So Boeing is dragging the market down, primarily the Dow. That's why the Dow is also pushing new all-time highs, but to a lesser extent than other markets. Keep an eye out on that. That'll have great influence on the price of Boeing this morning. All right, in terms of the U.S.-China deal, the phase one deal has been officially agreed to, but it has not been signed. There was news this morning at around 8 a.m. that Davos in Switzerland may be the next location where Donald Trump and President Xi will meet on the 21st to the 24th of January. So in about over a month's time, a little bit over a month's time, there could be a signature, but there is an agreement to the extent that the Chinese State Council held a press conference on Friday during the U.S. market hours and provided a scripted Q&A session. Very odd. They're like, hey, you over there. Yeah, you. No, not you. You asked the question. And then as they were answering the question, they're reading it off a piece of paper. So obviously they knew the question. But anywho, they did a press conference. It was a good gesture. They said they supported it. The U.S. wanted to buy agricultural products. Said they would do $40 billion. So there is alignment and agreement. And Donald Trump also on the weekend said they're not going to wait till after the election to get the phase 2 started. That we want to start and roll with it while we have momentum. And that's all great news around the board for stock market. So there they are, new all-time highs. All right. No new tariffs were implemented. Obviously, December 15th was the deadline, but because the deal tariffs were suspended, China is also peeling back some of the tariffs that were planned. And kumbaya, we have a celebration in the market in a strong seasonal period. Not a surprise. We've been bullish for the last couple of weeks, all of December mainly. All right, we'll stay bullish through January, and then we do expect a little bit of a pullback at some point, but the upside's the right side right now. You can't fight it. All right, there's a trade deal that was done. The Federal Reserve is pumping in an abundance of liquidity. Markets, asset prices are going to stretch. That's just valuation. It's simple. There's no need to question or argue it or come up with your own logic. Just understand and just get in and trade it. All right, that's where the money's at. The money's not in understanding. The money's in executing. Very important. An analyst needs to understand. A trader needs to execute. All right, and oftentimes we're the analyst and the trader. In fact, that's how we have to be. That's why it's such a hard job. All right, in Asia, Japan's down 0.3%. Hong Kong's down 0.7%. China's up 0.6%. India's down 0.2. So mixed markets across the board. In Europe at midday, Paris, or London rather, is up 2 whole percentage points. Massive rally there. Paris is up 0.8%. Frankfurt's up 0.5%. The rally in London is more than likely attributed to Bojo winning majority. Now it's going to be easy for him to pass the Brexit legislation through. What else? U.S. Dow's up 0.2%, S&P up 0.4%, Nasdaq up 0.4% as well. We are now trading the H contract or the March. So for those of you that are still on the Z, which is the December, volume has, before I tell you that, it's official, volume has surpassed the contract of December on the H. So H is trading at 308,000 contracts overnight. And these December, the Z is trading at 240,000. All right, the only reason I know is, look, these symbols on futures can get confusing, but we have a little mouse pad. It's kind of cool, hey? Like this Toronto, woohoo, CN Tower stretching vertically across. This is actually the building. Hang on, let me find it. I think it's cropped out. So this is Bank of Montreal, this building right here. And Scotiabank was one over where I used to work as a trader. Pretty cool. This is the skyline. Now that I think about it, I should have left. I don't want to see that building. I spent a lot of my life there. There's the code. So as you can see, December is the Z. And now we are flipping over to the March, which is the H. All right, so let me put my mouse back on it. The H contracts got more volume. We're rolling that over on the futures for trading today. All right, crude is flat for the day, more or less. Seeing a little bit of downside early on. All right, in other news, gold is flat as well. Bitcoin's down almost 1% to the really low thousands now, $7,051. Treasury yields are up 2 basis points. This morning we had manufacturing numbers on the Empire State Manufacturing Index. That came out at 3.5 versus an expectation of 2.0, but above the low range of the expectation of 2.5. So really, that's a miss, but a slight miss, but it's a miss nonetheless. All right, 9:45 this morning, we have the PMI Composite Flash. That's pretty important. 10 a.m., we have the NAHB Housing Market Index. It's actually the NAHB, but I like to break it out in a little bit of Arabic there because it's more fun. All right, life is all about fun. 4 p.m., we have TIC, Treasury International Capital. And this week on the calendar is pretty busy anywhere outside of the U.S. The U.S. doesn't really have much key events. There's some medium to low impact economic news, but the big impact news is this morning at 9:45, the flash number, the composite. That's very important. Last time it caused a lot of volatility. The one before last time, actually. So that's what's on the dock today. After this week, things slowed down tremendously. There's absolutely no high impact economic events next week. Think about that, except one. But it's very slow. Things are going to grind to a halt. So really, I know the calendar year ends in just over 2 weeks. Is it over 2 weeks? Check the calendar. Yeah, about that. I mean, if you count this week, the 23rd, up to the 23rd, and then up to the 30th, so you have 2 weeks and 1 day. But really, we only have 1 week left of trading. This is the last week up to the 20th, and then anything in the Christmas week to the end of the new year, it's transactional trading. So institutions are rolling over contracts, rebalancing portfolios. It's going to be the Wild West on low and thin volume. So this week's the week that we step on it, close out the year for 2019, close the book. We have one heck of a year. I'm very proud of you guys for what you've done so far, but let's not let off the gas. We got 5 more days, and then we could ho, 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 start celebrating. Take care, YouTube. I'm going to end it there and throw it to our oil desk here in the ATL. We love you guys. YouTube, manage your risk, trade pro. And we'll see you in the community in 2020 if you're not already there. All right, take care and all the best. Ciao. All right, Boxman, you, sir.